What's up, y'all? Welcome back to another YouTube video. My name is Camelia. I'm a day trader, content creator. So I've been up on these charts with my community since about like 8:30 this morning. When I tell y'all NQ has not given me any setup today, like we first started off like this. I'm gonna let y'all see this real quick. I'm gonna let y'all get into my head. So I originally wanted to take buys, right? But NQ started the morning off here. And we started selling off, and I knew the sales would end eventually. Of course, we just didn't know when. But, you know, price was doing its thing, and it never gave me a good demand setup to get in buys here to catch this move. And once that happened, now we've just chopped and been chopping all morning in the same spot. And at this point, it's 11:45. I'm fine with calling it a day. That's the thing about day trading a lot of people don't understand. When your system and your process, let me turn this beeping off. They're going crazy in the Discord. But when your system and your process is not present, or in other words, when your type of setup is not present, it's okay to just not take a trade, y'all. We don't have to take trades every single day. This is how we keep our win rate high, is we're taking trades only when our setup presents itself. And today, I'm just not getting any of that. I want y'all to see a good example of what I mean by A+ setup, because ES gave an A+ setup this morning. I kind of feel like they try to move similar, but take that with a grain of salt. ES gave exactly what I wanted NQ to do, and it was just all she wrote. Y'all look at this. This is ES. This is what I consider A+, right? We got a breaker structure here. So we have our major breaker structure and we have a minor breaker structure. Doesn't matter which one, they both work. So we got a breaker structure, price pulled back to the demand zone. You notice how no candles closed in this zone. This lets me know it's going to be an A+ setup. From here, you could either have gotten in aggressive, you could have gotten in conservative, you could have gotten in break of the candle. All three of those entry types, they worked. They all worked in this instance. And as you can see, price just cooked up nicely. Since the market isn't giving much of anything, the most important thing I feel like is knowing when to walk away. I don't know about y'all, but for me, it seems like if I stay on the charts for a long period of time, I feel like I'm now chasing the market. And it's just like, if it doesn't give me a setup when I'm on, it's just like, whatever. I'm just gonna try again tomorrow. I'm not gonna chase the markets. I allow my system and process to keep me sane, to keep me grounded, to keep me disciplined, and to just not take anything sporadic, and I kept my account. So a no trade day is still a winning day. I'm gonna pop my P&L up for the week, for the month, up on the screen somewhere here so y'all can see it. And this just shows that you don't have to take trades every single day. It's okay having no trading days. It's okay having losing days, but as long as you balance your win to reward ratio, if you balance your risk to reward, it becomes so much more easier. Find a system and process, have a risk to reward system, stay disciplined, stay patient. Point blank period. Once you have those, now I'm going to show you guys the 4 steps you can apply to any trade if you're taking supply and demand. When I tell y'all this system works, all you have to do is follow it. All right, y'all. So before we get into the charts, I want you guys to remember that simplicity is key. Keep it simple. The moment you find yourself adding too many different things, the moment you find yourself taking too many things in the market into consideration when it comes to your move, you're now overthinking the entire thing. I'm gonna show you guys how to trade supply and demand in the simplest way you could ever imagine. Once I show y'all this, this is going to be a game changer. So get your pen and paper ready. I'm telling y'all, this is gonna change the game for a lot of y'all. Keep it simple, straight to the point, follow the system, follow the process, and don't do anything else. I'm telling you, so get your pen and paper ready. Let's start with the 4 easy steps. I'm gonna give y'all the 4 steps first, and then we're gonna apply those 4 steps to the market, and I'm gonna show you guys exactly how to do that once we get to the charts. And also, while we're going over these steps, I'm hungry, so I'm gonna put me some lunch on. I'm gonna just take y'all with me. We're just gonna relax, we're gonna chill. This is how we should be when we're taking our setups. I have these easy meal for one dinners from Publix. I'm gonna try to make this real quick. I'm gonna preheat my oven. Matter of fact, let me do that. Let's preheat, I think 350 should be good. I'm preheat my oven to 350. This says it's gonna take 36 minutes. So this is enough time for me to break down the markets for y'all. You can only trade supply and demand in a trending market. So the market has to be trending either bullish or bearish in order for you to take a setup. If price is consolidating and trading sideways, then unfortunately you're not able to use a supply and demand strategy in those certain market conditions. Step 1 is gonna be find the trend. Here's the tricky part about finding the trend. There's trends on every single time frame. Sometimes your daily trend may be different from your 5-minute trend, or your 5-minute trend may be different from your 30-minute trend, or your 15-minute trend, or your 1-hour trend. So when you're looking to find the trend, the key is to take your supply and demand setups on the time frame that you see your trend. So if you are a 1-hour time frame trader, you should find your trend on the 1 hour. If you are a 5-minute time frame trader like myself, I'm going to be looking solely at the 5-minute trend. What does that mean? If my 5-minute, let's say, is bearish, right? My daily time frame most likely can still be bullish. Does that mean I'm going to not take sales just because my daily time frame is bullish? No, I want to focus on the trend of the time frame that I am trading. That just simplifies that. Find a trend. I like to trade the 5-minute time frame, so I'm going to stick to my trend on the 5-minute time frame. Now that we found our trend, step 2 is now going to be wait for a break of structure. Now look at this outside of the thing. See if it's going to be good. I think I'm going to season it a little bit myself, just because y'all know how that goes. Not only am I waiting for a break of structure, but I want to see a break of structure in the direction of the trend that I'm anticipating the market to go in. If I am looking for buys, for an example, I need to see a break of structure to the buy side. I don't want to see a break of structure to the downside, because then there's no trade there. I need to see a break of structure in the direction of the trade I want to actually take. So I seasoned it up just a little bit. So now that I've found the trend and I've gotten a break of structure in the direction that I want to see the market go, now I can wait for price to come back down to my demand zone. Let's say we're buying. We're going to use buys as an example. If we were selling, we'll be waiting for price to come back to a supply zone. All right. Your supply or demand zones never become available until that break of structure happens. If that break of structure doesn't happen, that zone it's not even considered a zone yet. What makes it a zone is once we get the break of structure. So your zone is always going to be where price pushed out of. So if I'm buying and we get a nice strong bullish candle, that red candle at the bottom of that move will be our demand zone. All right. So step 1, find the trend. Step 2 is wait for break of structure. And then once we get a break of structure, step 3 is wait for price to come back and tap your zone. Okay. So now that we got a break of structure, we now have an available zone, and we still have to wait for price to come back and now pick us up and put us into the trade. It's just like a train stop, y'all. I've talked about this in a previous video. These are train stops. You cannot get in on a moving train. So if the market is moving up bullish, I need it to come back and pick me up so we can go ahead on for the ride. All right. So we have step 1, 2, and 3. Once we have those 3 steps, now once we get a tap at our zone, step 4 is going to be take an entry. Let's take a moment of silence for step 4. Step 4 is very, very, very important, because this is the time where you're going to actually click that buy button, click that sell button. This is the time you're going to actually take a position. And I feel like this is when a lot of people get confused. They know the system and the process, but they're not too sure when exactly they need to get into that trade. My oven is done preheating. So let's put our, oh crap, I almost messed up and was about to put this in here with the paper inside. Y'all don't do that. I have to remove this. All right, I'm so glad I noticed that, because that would have ruined the entire meal. Now that that's in the oven, hey Google, set timer for 36 minutes.
Got it, 36 minutes. And that's starting now.
There are 3 different entry types I like to use. The first one is going to be an aggressive entry. What is an aggressive entry? An aggressive entry is when, as soon as the market taps into your zone, you're hitting buy or sell just straight like that. Your entry is just based off price tapping the zone. You're anticipating price to hold that zone to take you where you want to go. All right. Your next entry type is going to be a conservative entry. That is when you get a tap at the zone, and then you wait for that next 5-minute candle to close at your zone without invalidating it. Okay. So you want the candle to come up. You want to see, if you're buying, for instance, you want to see a green bullish candle coming up out of your zone, and you want to see it close bullish out of your zone, coming out of your zone. Okay. That is your conservative entry. And then you have what I like to call a break of the candle entry. That's where you're waiting for a tap. You're waiting for that next 5-minute candle to close bullish. And then you're waiting for the next candles to come up and break the previous high of that bullish candle. All right. All of those entry types work. Each just has its own pros and cons. An aggressive entry, you have a smaller stop loss. A conservative entry, you have a little bit of a larger stop loss. And then for your break of the candle entry, you as well have a larger stop loss. And you have the chance of potentially missing a decent entry on the move. Because once the move gets too far away, we gotta learn when to stop chasing, okay? If the candlestick is flying up, there's no need for us to continue to get in the trade. We wanna get in the trade as close to the zone as possible. That's the whole idea. Now that you guys have all those 4 steps, say them with me, guys and girls. First step, find a trend. All right, step 1 is find a trend. Step 2, wait for a break of structure. Step 3, wait for price to come back and tap your zone. And step 4, take your entry, whether it's gonna be aggressive, conservative, or break of the candle. Now that y'all have the 4 simple steps, let's go to the charts. I'm gonna show you guys how to apply it to a live trade. And just so you guys can see how simple and easy this process can be. The hardest part is gonna be you applying the system and process, you working that discipline muscle, you being patient, and waiting for these setups to actually play out. That's gonna be the hardest part about this whole thing. All right, so let's go to the charts. Let's lock in. So now that I'm at my computer, let's apply everything I just talked about to the live markets. Hopefully my audio is not much different. I'm on my computer audio now, but it should get the point across. So I wrote down the steps here. These are the 4 simple steps. 1, find a trend. 2, wait for break of structure. 3, wait for price to come back and tap your zone. 4, take an entry, aggressive, conservative, or break of the candle. Okay, it's literally that simple. Now that we have our steps, let's apply it to a live market situation. Okay, I'm on my 5-minute time frame. I prefer the trade at 5-minute time frame. That's just me personally. If you guys decide to maybe do the 15 or the 30 or the 1 hour, you can apply this same system and process. Just remember that instead of finding your trend on the 5-minute, you're going to be finding your trend on the 1 hour time frame. So now that I'm on the 5-minute time frame, if I zoom out, the trend that I can clearly see on my screen is a bullish trend. So I know I want to buy. Now I just have to apply the system and the process to the market so I know when to buy. So I know when to get into the markets, okay? That's what this whole thing is for. Because I know we've all been there, because I've been there myself, where you know the direction that the market is going to go, but you just can't quite get the timing right. Like it always happens after it takes you out. You get in for buys, it stops you out, and then it goes into your direction. Okay, so the reason why that's happening is because we are on the wrong side of the market. We have to now trade with the banks, not be a regular retail trader, but shift our mindsets to be patient and to be disciplined, so that way we can now trade with the banks. The whole point of supply and demand is to buy low and sell high. Okay, so if I want to buy a market, I'd rather buy at a lower point than a higher point, right? If you had $1 million to put into the market, wouldn't you rather put your $1 million in at a lower price than a higher price? That's exactly what supply and demand is, and that's exactly what it allows you to do. So looking at these markets here, we're clearly on a bullish trend. All right, let me move this out the way just a bit. We're clearly on a bullish trend, and I can see the market buying with my eyes. I can see it buying. I see a bullish trend, and then I also just see this bullish movement right here where price is just pushing up bullish. An uneducated trader would just start buying right up in here, just taking buys, right? But when we start trading like the banks, we know that, hey, if the market can push up bullish, it'll most likely pull back in order for me to get in at a lower price, okay? So first step is gonna be find a trend. Second step is gonna be wait for break of structure. So we can see these highs here, right? We can see how price had these other highs here. And you wanna see price break the structure of a high to give you confidence that it's going in that direction. So we see how we have this, you see how we have this bullish movement to the upside here? I want to see it break these highs because I want to focus on current price action, right? I'm a day trader. I'm looking to trade just a 5-minute, even though, yes, all this information is cool, but it's irrelevant to me. I already know the trend. Now I just want to focus on current price action. I'm not looking to swing. I'm looking to just catch a couple of points in a direction that is flowing with the market, okay? So I can see that the market is moving up bullish, and I can see my bullish trend. But now that I have my bullish trend, I need to wait for step 2, which is a break of structure. So we have these highs right here, and I want to see price break these structure highs to give me confidence that the market may continue moving up bullish. If it can do that, Then I'll move on to step 3. If it does not happen, then most likely maybe price may be building up some sort of resistance here, could be trying to sell down, but I see a bullish trend and I'm confident in the bullish trend, but I need it to show me that it's still going to continue bullish. So I want to see the trend, and now I want to see it break structure, okay? So let's play these markets to see if we can wait for a break of structure. If no break of structure happens, then there's just simply no trade here, okay? So the market will play, and you just got to let the market play out. You got to learn to sit on your hands. If it goes, it goes. If it doesn't, it doesn't. All right. So the market's just kind of chopping around here. It's trading sideways, not really giving me much of anything. Okay. And then now you see how we got this breaker structure to the upside. Even this wick came up even higher. So the system, the process has now allowed me to avoid all the chop. Okay, because there's no buys or sells here. Even if I wanted to sell, I'd need to see a breaker structure to the downside, which would be down here. And if I want to see price buy, I need to see a breaker structure to the upside. The reason why the breaker structure is so important, and the reason why you want to see that breaker structure first in the direction that you're going, is that that's what's going to give you not only the confirmation, but the confidence to take a trade in that direction. All right. So we found our trend. We now have a breaker structure. Now that we have a breaker structure, we can now mark up our most recent demand. This is the key word here, most recent demand, okay? So yes, of course, there's demand zones down here. There's demand zones over here. There's demand zones over here. There's demand zones all down here. But these are not our most recent demand zones. We want to shrink it. Let's bring it back. We're currently day traders. We're current traders. We're trading today. Not another day, not another hour, but I'm current trading today, right here, right now. So my current most recent demand zone would be right here. All right. So we can see the aggressive buying coming out of this area. We can see how price broke structure to the upside. Now I want to mark up my most recent demand zone. All right. So I'm just going to draw a box around it from the top of the wick to the bottom of the wick. The entire zone is where I'm okay with price coming down into, as long as we don't invalidate it. And what that means is, as long as we don't come down here and break below this area, if price can hold this zone, I'm willing to take buys from this area. But before we get too ahead of ourselves, this zone is not an area for us to take until price comes back and taps into it. When it taps into that zone, it's kind of like the market giving us a signal saying, hey, this is your time to get in. This is your train stop. The train is here. It's now ready to pick you up. But if it does not come back and tap this zone and price decides to continue pushing up bullish, then there's just no trade. You have to be comfortable with the market following the 4 set of rules that we have for ourselves. Okay. So these are our 4 rules right here. We have to be comfortable with that. So now we're on step 3 and we're waiting for price to come back and tap our zone. So let's see if we can get a tap into our zone here. Price will come down and tap it. Oh, boom, just like that. We now have a tap at our zone. Now that the market has tapped our zone, this is when we can now move on to step 4. Step 4 is going to be take an entry. I know it may seem scary. I know it may seem, I don't know. But this is why we have this system and process in play to help guide us through taking these positions. This is all a probability game, okay? These 4 steps will help you take the right trade, I can promise you. So now that we have our tap, now that we can choose what type of entry we're going to take. So how do you decide when to go in aggressive, conservative, or break of the candle? That's the question of the day. This is when things get a little bit confusing. For me, I only like to take aggressive entries when price is trending very heavily in the direction that I want. So when NQ is just on a very, very bullish run, it's been bullish day after day, week after week, I'm more so comfortable with taking an aggressive entry. Also, it all depends on how the candles are forming. These are 5-minute candles. Once this candle taps here, you now have 5 whole minutes to decide whether you want to still get in aggressive or not. Okay? So even if you wait for this candle to close, you're still getting in aggressive if this candle still has time left on it. All right? If you notice that this candle is kind of developing, It's not really going anywhere. It's not going too deep into the zone. A lot of times you'll notice, okay, I might can go ahead and get in aggressive at this point. Okay, this just takes practice and doing the same thing over and over. This is where that repetition comes in, because as you take these setups over and over, you start to know and become more confident when the market starts to do certain things. So for example, for me, no candles closing inside of a zone is very, very vital, and that's what makes it A+ for me. So I have this candle, it's barely inside my zone, because remember, we can come all the way inside this zone and still be valid, but it didn't come too far into my zone. I like to see no candles close into my zone, so I would be okay getting in at this moment, especially now that this candle has closed. We've closed bullish. All right, remember, our stop loss is always going to be outside of the zone. All right, and then from there we can decide if we want to go for a 1-to-1 or 1-to-2. A lot of people ask me, how do you know where your 1-to-1 is located? This is where this projection tool comes in really handy. So if you notice the ratio here, once I get it to a 1, it has a 1 right here. If I wanted to go for a 1-to-2, as you can see, those numbers are changing, and I can push it up for a 1-to-2 if I would like. All right, 1-to-1 for me is always my first target, and then I like to trail my position up to a 1-to-2. But the day always differs. Every day is always going to be different. And then now when it comes to your conservative entry, your conservative entry is when you're just waiting for a bullish candle to close. So seeing this bullish candle close here would indicate a good time for a conservative entry. And then of course, a break of the candle will be waiting for a next candle to come and break the previous high of the previous candle. All right, so let's play these markets to see how using these 4 simple, easy steps would allow us to just simply get into this trade. So let's see if we'd win this trade right now. Almost little to no drawdown there. Straight to TP. Wow, simple as that. Straight to TP. Following the same system and process, because remember, the market moves in a wave, right? So when we see this break of structure, we know price can pull back to our zone. If it holds that zone, we should have no doubt in our mind that that zone should hold, as long as no candles come down and invalidate that zone. All right, so that's an example of a buy. Let me show you guys an example of a sell using the same 4 easy steps. All right, so now I'm going to show you guys how to apply the same 4 easy steps to a sell setup. So same idea. This is just what happens when you come to your 5-minute time frame, and when you're using step 1, which is find a trend, and you're seeing a bearish trend on your screen. That is when you can physically see, the market is moving down bearish. All right, so because I see the market moving down bearish, does this mean I just start taking sales? Absolutely not. We're going to use the same 4 system and processes, the same 4 steps to apply to these markets to then get into a sell position. All right, so now that we know the trend, obviously the trend is bearish. Now we want to wait for a break of structure. So whenever we're waiting for a break of structure, we want to wait for a low to be broken. We've come to the markets. This is how the market looks. All right, I'm not going to say price broke structure over here, so I'm going to now wait for a supply zone up here. No, I'm going to wait for a break of structure from the time I've gotten on the chart. So since I'm just now getting on the charts here right now, in order for me to wait for a break of structure, I need to see price break these lows. Hold on, y'all. I think my food is done already. Give me a second. Sorry, y'all. I had to turn my food off. It's done already. I want to see a break of structure when I'm on the charts, okay? I don't want to use something from the past. I want to use current price action, all right? Because if price is coming up to a supply zone right now, that's not my trade. That's not my setup. My setup starts from the time I get on the market. So I'm A1, find a trend. 2, wait for a break of structure. All right, so we see our trend. Let's wait for price to break structure to the downside to give me confidence that it's going in that direction. Once it gives me confidence, then I'd look to take a trade. Okay, so now we got a break of structure. We can see the break of structure happen here. Now that we have a break of structure, we can now activate our supply zone. Where is my supply zone? Your supply zone is always going to be the green candle from where price came out of. Remember, we're trading the most recent supply zone. Is this a supply zone here? Yes. Is this a supply zone? Yes. What about this one? Yes, 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 yes. All these are supply zones, but they're irrelevant to me because they're not recent. We want to focus on recent price action. We're day traders, we're right now traders. I'm trying to take a trade right here, right now, today, within the next hour or a couple of minutes if I can. Okay, I'm not looking to wait days and weeks and months to take my trade. So I'm going to focus on the most recent price action. So now that I have a breaker structure, now I can move on to step 3, which is wait for price to tap your zone. So now my supply zone is now available. This is going to be my supply zone right here. Now, me personally, I will include the wick of the candle beside it if it's going through my zone. So for example, if I draw it here, you see how it looks invalid. I'm going to include that candle in there because I'm just going to combine the candles, more so for cosmetic purposes. You don't have to. That's just something that I like to do. It makes sense to me. All right. So now let me move these steps down here so y'all can see how we're just following the same 4 easy steps. Now that we found a trend, we got our breaker structure, and we have our zone. Can I start selling from right here? Absolutely not. I need to wait for price to come back to my zone. I need my train stop to become activated in order for me to get in. I'm sorry, y'all. I got this Discord just a beeping in the background. I'm so used to hearing it. Hey, Google, stop the timer. Okay. All right, so now let's play it. Let's see if price will come back to our zone. All right. Because I can't do anything unless it comes back to my zone. The zone tap is the market welcoming me into the trade. So you see how these candles are going lower and lower. I'm not FOMOing into sales. I know people are just selling all up in here. They're FOMOing all into sales. I'm not FOMOing into anything. I'm waiting for price to come back and welcome me into the trade. Because again, the market moves in waves. Y'all don't forget it. The market moves in waves. It doesn't move in a straight downward motion. So when I'm getting an aggressive leg down, I know it needs to pull back, tag me into the trade so we can keep going. All right. So that's what I'm looking for. So let's just be patient, sit on our hands, and see if the market will actually come back to my zone and tag me in. And as you can see, the market is coming back, and we get a tap. Y'all, we get a tap. Look at this. This is just, it's so textbook. It should be illegal. This should be illegal. Price is now tapped into my zone. Once we get a tap, you can now decide if you want to go aggressive, conservative, or break of the candle. All 3 of those situations worked here. Aggressive would be as soon as price taps the zone, you get in short. Conservative would be waiting for a bearish candle to close coming outside of your zone. That would be right here. Again, stop loss would always be outside of your zone. I see people asking me, where's my stop loss? Your stop loss, you don't choose your stop loss. The market chooses your stop loss. Your stop loss is going to be outside of the zone. The only thing that we can control is the size that we put on these trades. That's how you manage your risk, okay? But you always want to put your stop loss where it makes sense. That's going to be outside of the zone, all right? And then you can decide to go aggressive, conservative, or break of the candle. All 3 of them work, so the entry would be somewhere around here. This is aggressive, this is conservative, and then conservative and break of the candle are in the same spot today, right, for this trade. And then you can see if the market can go down for your 1-to-1. So the 1-to-1 in this instance would be right here. And then your 1-to-2, if you want to go for a 1-to-2, that's going to be right here. All right. So we set it. We have our trend. We have our breaker structure. We have price tapped our zone. And now we can confidently get into this trade because everything is making sense. All right. So let's play it and let's see if the trade will actually play out for us. And there you have it. I mean, like, what can I say? What can I say? There you have it. It's literally as simple as that. 4 easy, look, I can't even put the fingers up. 4 easy steps. It's that simple. Y'all, I just don't know how much more simpler it can get from here. This is the craziest system and process I've seen in a while. And maybe it's because I'm so focused on it. But I want y'all to know these results can apply to any system or strategy that exists. The main thing that's important, narrowing down your plan to simple steps that you can write down, that you can repeat back to someone else, and then just solely following just that. Even if you don't trade supply and demand, you could trade support and resistance, you could trade EMAs, you can trade Fibonacci's, you can trade fair value gaps, you could trade order blocks. It doesn't matter what you're trading. What matters is being able to scale it down to a few steps, limit it to where you have a few set of rules that you want to see. And when those rules apply, when you apply those rules, you see results. And this is what supply and demand has been able to do for me. I've been able to narrow it down to 4 simple, easy steps. Every time I apply these steps to the market cooks up. Every time I waver from these steps, I lose. Every single time. And you guys wonder why my P&L looks the way that it does and why my trading have changed? Because I've decided to just not take all these sporadic, FOMO-y, unnecessary trades. If the market doesn't follow the 4 set of rules that I have for myself, I'm just not taking a trade, point blank, period. It's time to lock in. It's time to take this trading thing seriously and just stop being so nonchalant when it comes to your trades. Why would you put your money just on anything? Put your money on a system and process that you know works. And I'm telling you, your trading will absolutely change without a shadow of a doubt. There's no doubt in that. So if you guys want to see how I apply this system live, make sure you guys hit the link down below. I trade live with my community 3 to 4 times a week. And we get on and we're patient and we wait for the same 4 steps to play out. If the market doesn't give us that, then we don't take a trade. But when it does, it just feels so good when we catch these wins or we avoid the losses because we now have a system and a process to apply to the market that makes sense, that we could just rinse and repeat every single time. So thank y'all so much for watching. Make sure you all like, comment, and subscribe. And tell me guys what y'all think about the strategy. Can I tweak it? Is it okay? What's up? Let me know what y'all think. If you guys have any video suggestions, make sure you guys drop those down as well. And I just want to give y'all so much value. Like, I could charge y'all for stuff like this, but there's no need. There's no need because it doesn't matter the information that you give. It just takes a certain amount of discipline to lock in and even follow it anyway. So I'm okay giving this away for free. But if y'all want to learn how to actually lock in and have patience and have discipline to even wait for these setups to even play out, then lock in with me, click the link in the bio, and let's make some money, y'all.